Hey guys, Corey with Corey Means Business. Want to talk to you quickly about the banking crisis. Is there a banking crisis? The answer is no. But let me tell you why. As you may have heard on a lot of social media channels by people that got kind of, motivations that probably aren't in your best interest, it all comes to be coming from people that want to sell you gold and want to sell you cryptocurrency, okay? Well, they're not bad people. There's nothing wrong with gold. There's nothing horribly wrong with cryptocurrency. That's another video for another time. Maybe you can go check out my other videos on that to get some more information about what I think about cryptocurrency. But let's focus on the banking crisis. Now, is there an actual banking crisis? The answer is no. Why? Two reasons. One, the Federal Reserve has went ahead and backstopped all of the toxic bonds that were causing the issue. And two, the U.S. Treasury and FDIC have went ahead and insured all of your money. So no matter how much money you have in the bank, whether it's $5 or $50 million, it's absolutely protected. So you don't have to worry about it, okay? Now, the people that caused the problem are also people that fixed the problem. So I don't know if I'm more angry at them for causing the problem or am I glad that they fixed the problem? Well, I guess a little bit of both, and that's okay. So, short rundown. What caused the problem? The Federal Reserve raising interest rates. It all goes back to the pandemic. The government wanted to give us all a bunch of money to save us, okay? I'm from the government, I'm here to save you. Very bad words. They needed to raise $5 trillion. That's right, trillion with a T. And they needed to do it quickly, okay? Now the government just can't make money. Only the Federal Reserve can make magic money. And so during the pandemic, what the Federal Reserve did was say, okay, government, we'll get you the $5 trillion, and here's how we'll do it. We will make magic money. We will lend it to the banks. The banks can then turn around and buy your treasury bonds, which then allows you to raise the money. Now at the time, the problem was the interest rates were so low that the bond market was only going for about 2%, or the return rate on the bonds was only about 2%. Now at the time, this is not really a problem because interest rates were super low. Fast forward 2 years later, and the problem becomes the Federal Reserve has went ahead and raised interest rates dramatically, as I'm sure you're well aware of, which has then made those bonds that these banks are holding worth a whole lot less money if they need the money today. Well, throw in some social media people, claim there's going to be a banking crisis and these banks are going to start collapsing. Next thing you know, a bunch of people start running to the banks to pull out their money. Well, the banks don't necessarily have all of our money, right? So the bank gets into a liquidity crisis. Well, the bank, needing money to be able to give to their depositors, would need to be able to sell those bonds to get the money so they could then have the money to get their depositors. The problem comes in that because the interest rates on new bonds are so much higher than the old bonds aren't worth as much, and they're not worth as much as their face value. Matter of fact, only about 20 to 30 cents on the dollar if you needed to sell them today. So why the bank is setting all these billions and billions of dollars of treasury bills that have these high face values, if they need the money today, they'd have to sell them for 20 cents on the dollar. Thereby their balance sheets would show they would lose billions and billions and billions and billions of dollars. Because of that, investors started to panic. Investors started to sell their stocks, lowered the stock prices down to almost nothing, caused the bank not to be able to borrow any money, bam, collapse. And that's what happened with the banks. Now again, the good news is this problem was created by the Federal Reserve. Obviously it was created even worse by the Treasury borrowing all that money, but they've also fixed the problem. They fixed the problem by doing two things. One, the Federal Reserve says they will buy all those bonds back from any bank that wants to sell them for the full face value, no discount. Therefore, bam, the banks have all been made whole again. Number two, the United States Treasury, along with the FDIC, has decided to go ahead and throw the FDIC limits out the window. And what have they done? They said that all deposits from everybody in all banks is 100% guaranteed. Whether you got $5 or $50 million, they got you covered. So what does this all mean? Crisis avoided. Banks have all their liquidity at a moment's notice to be able to cash out those bonds. And because all depositors are 100% guaranteed by the United States government, the full faith and confidence in the United States government, no more panic, no more people showing up to get their money out of the banks. Problem solved. So therefore, do you need to worry? Absolutely not. You're covered. They've taken care of it. Again, I'm a little pissed they caused the problem, but I'm happy they actually fixed the problem. So don't be buying all this nonsense from people on social media. The banks are not going to collapse. There is not going to be a Great Depression. We can certainly talk about interest rates. We can talk about inflation, and we can certainly talk about the value of the US dollar, and I will do so on the next videos. See you then.